For the markets as well, it's been raining gains and was no different yesterday. We've been cruising at live highs for a record high for a fourth consecutive session. The pace of the rally, of course, has been really enamoring. Yesterday, we managed to close above that 19,800 print. It was once again Reliance, ITC that were leading the gains. So the benchmarks, so the heavyweights are the ones which are really now coming to the fore. And of course, the uptrend in PSU banks, that also continues, led of course by the big one, SBI. The rest of the sector also was charged up. And yeah, the FI buying continues, so nothing changes for us.
Siyasha, you take 2 steps forward and you take 1 step back. But markets right now, after that giant leap, are taking 3 steps forward and 1 step back.
Not even a step back.
Like,
they're just stopping
pausing,
there.
Yeah. So you got to ask yourself is that how long will this continue? You cannot argue with the trend. This is a liquidity driven rally where global cues are strong and supportive, and flows at a global level, I guess, is something which is really helping the market. So there is no point in trying to preempt the trend. So don't be in a hurry to preempt the trend. Having said that, in this market, every market, when you see this kind of a one-way linear rally, excesses will get created, and there are spots of excess activity in the market, especially in the small cap space and especially in some of the rank mid cap stocks. So if you're trading there, you have to start reducing your trading appetite. Similarly, if you're looking at committing fresh capital in some of the small and mid cap stocks, maybe this is not the time to do that. So this is not the time where you want to commit more, but you do not want to even reduce your current commitment. So I'll say it again, do not commit more, but do not just book profits because markets have gone up, at least in the large and the small cap stocks. What I like about the market is this beautiful sectoral rotation, where one day it's power, the very next day is hospitality, before that it was hospitals, then it could be power companies again. So I think this beautiful sectoral rotation is happening. But the problem with this beautiful sectoral rotation is that a lot of small and mid cap stocks have started piggybacking. And my only fear is that in the small and the mid cap space, you remember this game which we used to play, passing the parcel?
Yeah.
The problem is that if you're stuck with the parcel, you're out.
Yeah.
So in the small and the mid cap space, that is the risk, that you don't want to be stuck with the parcel. See, the music is on.
Yeah.
I don't know when the music will stop. But when the music stops, you don't want to be stuck with the parcel.
Yeah,
you played that game, right?
Yeah, of course, played that game, lots of memories, and now I think my daughter will be playing that game very soon. But you know, Nikunj, you were also talking about that it's time to get choosy, put your seatbelt on as well. So that sense of caution as well prevailing, right? Especially when it comes to the mid and the small cap stocks, that you need to be very choosy.
See, you got to be choosy because when you are trading or investing, there are 2 factors you look at. Number 1, trend. Trend is your friend. So you got to stay with the trend.
Yeah.
But the margin of safety in small and mid cap stocks is not all that, is not really visible. So sliver of the market in the small and the mid cap space, I guess, is now looking attractive for a genuine medium to a long term investor. So my only urge, request and submission here would be that don't get drawn in because of price momentum. Stay slightly on the sidelines when it comes to small and the mid cap stocks, because when they will reverse, trust me, out of experience I'm saying, the reversal is going to be very nasty. Passing the parcel again.
Yeah.
Passing the parcel.
You got to get the punishment.
Okay, let's talk about the stock of the day, the week, pretty much, and that is Reliance Industries. It is critical because it will be demerging the financial arm, that is Jio Financial Services today. The ratio for the demerger, as we all know as well, is at about 1:1, and it's critical as well because the exchanges today will be holding a special pre-open trading for Reliance between 9 and 10 a.m. and then Reliance will start trading at 10 a.m. Lots to monitor on this one, Nikunj.
Look, this has been a special situation stock, and in last 1 week, 1/3 of the gains, that's a big number, 1/3 of the gains in the Nifty have only come because of one stock. There were technical factors at play. For those who wanted to, for a lot of institutional investors who wanted to own Reliance, the new financial services share yesterday was the closure, so they in a sense had to buy it. Second, because in the F&O market, you had to compulsory wind down your positions in all the 3 markets. So there was a technical factor which was at play, where arbitrage, where you were selling or you were cutting your exposure in the F&O market, rolling it over to the cash. So that also was really at play. So there was definitely a technical factor at play. Now what happens today? The story of the day is Well, Reliance demerger or price discovery. I would like to use the word price discovery here. There is a special pre-open window which will open between 9 to 9:10. Pre-open will settle between 10 o'clock and Reliance to start trading ex financial at 10 o'clock. So the price discovery for the financial business would be applicable at about 10 o'clock. And Reliance, when let's say the Reliance current price right now and at 10 o'clock price right now, the difference would be the price discovery of the financial services business. So the grey market, so there you go, Reliance opening price. If the Reliance opening price is at 2700 and if you look at the number here, 141, that really could be the theoretical price. To put up maths very simply.
Yeah, in fact, Kunal as well has been monitoring some very interesting data on Reliance, which we'll come to in just a bit. By the way, Reliance alone contributed about 85 points to the Nifty rally this week, and we are only 3 trading sessions into the week, frankly. Important day for earnings as well. You've got Unilever as well as Infosys lined up. Infy, of course, is going to be important, and especially the market reaction from Infy. The key expectations are, the deal wins. Are they going to offset deal cancellations? Margins, we're hoping that they're going to expand on easing supply side situations or concerns. Productivity benefits perhaps are going to aid margins. The wage hikes are going to be pushed to second quarter or third quarter. So that will also in some sense protect margins. But yeah, is the street now, given that Infy is one of the last of the large few to report its numbers, is the street going to have as a reaction as it did when we heard from TCS as well as HCL Technologies? That's something to be watched out for, although the numbers are only going to be post-market hours. For Unilever, we're expecting a volume growth of about 5%. We're expecting margin expansion, both on a sequential as well as an annualized basis. And the price hikes that they undertook, let's see what they actually entail when the quarterly performance comes. So yeah, important numbers, big ones at that, Unilever and Infy both.
So Unilever, frankly, is not going to nudge the needle and not a stock where everybody is really excited about and trying to understand the trend
high
there.
beta,
Exactly.
Stock.
Infosys is where the entire, assumptions and the entire excitement is. Now, IT stocks have run up. Now, bear in mind that when the estimates were released, post that, the run-up has been about 5 to 7% in Infosys. Now, the question you got to ask yourself is that even if numbers are above what the consensus view is, so the consensus view is that Infosys for the quarter gone by will do a sequential growth of about 1.5%. They may not sound sunny, but they will not sound bearish. Large deal will continues and they will talk about a second half recovery. That's the assumption. Now, with that assumption, the stock has run up. So now, for the stock to stay elevated, they really have to not only meet expectations and beat expectations. I would have said the reverse if the stock would have not run up. TCS ran up because there were no expectations. But for Infosys, post TCS numbers, expectations are high. So the trick now is that they not only have to meet expectations, they have to beat expectations. Now, if they don't meet expectations, that's a recipe of disaster.
If they don't beat?
If they don't beat, then I think the stock is not going to go anywhere. Because meeting expectation is something which the stock has already factored in, and the run-up has been about 5 to 7% from the recent low. So the sense on the street is that Infosys numbers will be better than what the brokerage community is doing. Look, there is a brokerage number, consensus number, and then there is an HOS number. So the HOS number for Infosys is that they would do something phenomenally better. And for the stock to stay alive, when I stay alive at these elevated levels, they have to meet that HOS number now.
Yep, that's critical. 1474, that's where Infy shut shop yesterday. And the other talking point, Nikunj, is going to be the kind of sectoral churn as well that we're witnessing within the mid-caps. For instance, the move that we've seen in the power stocks over the last 3 sessions, and also interesting in light of the fact that we had the conversation with the Power Minister, R.K. Singh.
Yeah, that conversation is coming up, and it's fantastic what's happening in the power sector. Look, you spoke about sectoral rotation. I think that's the beauty of this market, that, one day it's hospital, the next day it's hospitality, then it is power, then it is, back to some of the EMS, which is electronic manufacturing companies. Railway stocks are doing very well. So this market is rotating beautifully well. And the market, that's how markets move. They start with large cap stocks, then large cap stocks, they hit a pause button, then mid cap stocks, they start moving in, then small cap stocks, they chip in. That's how markets actually rotate. But I think Power Minister will showcase a showcases thoughts also in terms of what you should really expect later in the day. But this is one sector where the reforms in a sense have been really total. And just think about it. You know, Aisha, both of us have lived in Delhi, right? And earlier when we would say, no, Bombay never had power cut, so you're not part of this discussion. So it's Delhi only which we've suffered with power cut, 44 degrees and no electricity.
Load shedding.
Exactly, load shedding. There was a fixed time where electricity in the evening would not come. See, Bombay, they don't know.
South Bombay.
South Bombay. So look at this sector. Earlier when we would say 24/7 electricity, the idea was 7 din mein 24 ghanta. Today the real electricity is available 24/7. The rural electricity now is 20 hours a day. And that's largely because of the reforms which have happened in the power sector. This is one sector where major changes have happened. And I think this is something which markets are realizing really late now.
Yeah.